Freeport gets a 1-2 punch of good news and bad news. So Stephanie, the good news, we have Freeport finally settling the strike at its Grasberg mine. It's been raging for 3 months. On the bad side, we also have Freeport lowering production guidance for the fourth quarter. On the good news, Freeport's going to have to raise compensation 40% in 2 years. How does that compare to your estimates of what Freeport was going to have to deliver?
The strikers were asking for 200%, so 40% is a win-win to me. That's number one. Number two, they could easily make up these expenses by just a small delta change in copper prices. So this company can absorb a lot, and I think that based on their production growth, even though it's lowered, I think that they'll still deliver, and I don't see a material change to the earnings.
So let's get to production growth. Q4 consolidated sales will be about 800 million pounds of copper. That's down about 12%, and just over 100,000 ounces of gold. That's down 65%. How did that compare to your estimates? Because we knew it was going to be lowered.
Well, yeah, I mean, in October they already lowered it, right? And this is not a function of demand. This is a function of they can't get it, and they can't get it out. They have a 74-mile pipeline that has been sabotaged by the strikers, so they've got to fix that. They've got to work with the Indonesian government. So I think that this is not a surprise. We've been waiting for it, and I think that the stock actually would have rallied on the news had we not had this massive sell-off in the material stocks.
Right, I was going to say stock down 1-2%. Does that mean that Freeport's actually absorbing that production cut?
Sure, absolutely. I mean, I think, again, this is not a demand situation, and I think that really that was misunderstood by the press. This was related to this strike, and we have known this. Now, the strike went longer than we thought, so that's why the numbers are coming down more. But the company has done a really good job communicating this entire situation, and I think they fare pretty well coming out of it.
And what's a good buy level, and how heavily invested do you want to get into Freeport as we see gold and copper prices really come off here?
Right. Well, so this stock actually has underperformed the market and the group because of the strike, so it's pretty cheap right now. Actually, it's trading at 2.4 times 2013 EBITDA, which is really insanely cheap. That said, it could go lower just based on if the dollar trades in correlation and opposite of what the dollar. So maybe low 30s when it starts to yield closer to 4% is really kind of where you pick it up. But it's a volatile one, so it could get there, and you want to be kind of picking at it slowly.
And there are a lot of risks on the sidelines here for commodities. What's the number one? Is it going to be China?
I think overall it's just global. Yeah, it's global demand, global growth. What happens? Do we actually see a much slower China, but do we also see a much worse Europe? We all are factoring in a 1-2% decline in Europe. Is it more like 4 or 5%? Does China have a hard landing? U.S. can it continue to kind of muddle along? So it's really more macro versus micro, in my opinion.
All right, thanks, Stephanie. I really appreciate it. So don't be scared off by Freeport. Might actually make a good buy.